Did you know that in India, most engineers are men? Research shows that only 14% of engineers in India are women. But it's growing. We are welcoming more women into engineering roles, creating flexibility, opening hybrid opportunities, and rewarding innovative work. Whatever your skills, ambition, or experience, there's a place for you here. We are making BP work for women. Find out more at bp.com/women of BP.
Welcome back to BizBlend podcast listeners, where we take the business conversations you hear in boardrooms and make them real, human, and useful for everyday entrepreneurs. I'm your host, Sana, as always, and listeners, when most of us think about credit, we instantly tie it to our personal lives, like our credit cards, mortgage, maybe even that car loan we regret making sometimes. Now, for the businesses, credit works very differently, or at least it should. And yet, many small business owners never learn the rules of this game. Now, today, for this episode, we are going to peel back the curtain on corporate credit. What is it? Why does it matter? And how can it transform the way you grow and protect your own business? And to guide us, I'm joined by someone who's not just teaching theory, she's lived it. Listeners, meet my incredible guest, Sue Schuster. She is a corporate credit and profit acceleration coach who spent years helping Main Street entrepreneurs unlock the same tools Wall Street has leveraged for decades. And she is here today with us to show us how business credit can be a lifeline, not a mystery. So, Sue, I'm so glad you are here. So, let's quickly jump into our conversation.
Great, Sana. Thank you.
Superb. Okay, so let's start with the simple and the most basic here, Sue. When we say corporate credit, what exactly does that mean, and how is it different from the personal credit most of us are familiar with?
Sure. So think of your business account, your EIN, your tax identification number as a person. Um, that number can get into contracts. It can have bank accounts. It can get sued. It can do all sorts of things that a person can do as well. So if you have your personal number as your social security, that builds credit very slowly. When you get to be an adult and you get your first cards, you build credit pretty methodically and on purpose, but not. You could build personal credit by accident just by knowing that you should get cards and you should pay them off in a timely manner. Corporate credit is different in that it's actually really hard to establish. I've seen many companies who file their taxes and do everything right. However, I open their business credit report and there's almost nothing on it. And they're like, how can that be? And the problem is that most of the cards, trade lines, banks do not report directly to the three credit bureaus, being Dun& Bradstreet, Experian, and Equifax. So only 5% of the good things you do, paying things off on time, getting the appropriate type of loans or lines of credit, they don't hit your credit reports at all. However, if you make a mistake, almost 100% of the bad things you do, late payments, overdrafts, things like that, will get reported.
Yeah, that's kind of an irony, Sue. That's kind of an irony.
For sure. And also corporate credit grows very fast. And well, not very fast. It takes about a year to establish really good corporate credit if you know what you're doing and if you know what banks and trade lines and vendors to utilize. So it's actually a game that we know how to play, but it's not out there in just common knowledge.
Hmm. Yeah, that definitely makes sense. And Sue, I'm just for a bit blurring the lines between the business and the personal credit here. So let's say if I am a small business owner who has always relied on my personal credit cards, am I actually putting myself at risk without even realizing it?
Of course you are. So when you personally guarantee things, you say it's theirs, yours, not the business's. So not only do I come across many business owners that leverage their own personal credit, and their own personal credit score is not where they want it to be. So if they were to go get a car for themselves or a house for themselves, or even another credit card for whatever reason for their personal, their business is holding them back because they are fully leveraged with their business. Secondly, many loans are personally guaranteed. So, for instance, if you bought a new truck for your plumbing business and you're driving that around for your plumbing business and it gets in an accident and you've personally guaranteed it, not only will they have the right to go after the business for the accident and for damages, but now you've personally guaranteed it. So you also own your truck. So not only you are liable, or your business is liable, but you are liable as well. And there's many, many loans out there that are personally guaranteed. So if the business goes down and you said your house as collateral or your retirement or your children's college savings accounts, those are gone with your business. So not only is the business gone, but a lot of your assets as well. And that's not fair.
Yeah, totally, totally. That's not. I think this feels like a blind spot for so many entrepreneurs. Especially when we, as I mentioned, blur the lines between our business and personal life. So let's try to understand why corporate credit is needed. I mean, why do you believe every business, irrespective of it's a big or a small one, needs corporate credit? Because, as in, is it about surviving or growing, scaling, or something deeper?
It's all the things. So not only like if you have great credit and you walk into a bank and you're going to apply for a mortgage or whatnot, and you know your credit is really good, you go in there with a swagger and a knowledge that, you know what, I'm going to get this loan, I'm not worried about it. And then if somebody goes in with poor credit, they're like, oh no, I don't know. So not only can it affect just getting money to help grow and scale your business, that may or may not be personally guaranteed, um, but also other businesses can look at your corporate credit. Like we utilize the platform called Credit Safe, and it look at anybody's business. You just need the business name. You don't even need their EIN number or anything else. So other businesses can look at your business credit and decide if you're a good business to work with. So it's just another way that somebody else can research your business, and maybe if you have a bunch of late payments or not so great things or no credit at all, they might decide not to work with you. And I know that many contracts for big corporations, if they're working with a small contractor, look at those things to make sure that that's a business they want to work with. So not only are you personally liable for things, but other businesses might not want to work with you if you haven't established some sort of credit.
Mm, mm, mm. And no, and this is personally something that I also kind of have a misconception that I don't need credit. I have my cash flow. I only operate in cash. So I don't need this. I mean, what would you say to a business owner who insists on this?
Sure. So if you were ever to, okay, couple reasons. First, if you ever decided to grow and scale and then you needed money to do that, maybe you need to hire a key employee to get you to the next level, or you need an infusion of cash and you haven't already established corporate credit or credit in general, then you wouldn't be able to get the monies to get you to the next level. So it's kind of pigeonholing yourself to where you are. If you're happy with that, that's all well and good. Secondly, if when you exit, because some businesses we want to give to our family or sell as an asset. For many in the U.S., the business is the biggest asset, bigger than their house, and they're counting on that to help with retirement.
Yeah.
If you establish corporate credit, that line of credit goes with the business and becomes a business asset itself. So would you prefer to buy a business that has a line of credit already that you can utilize for cash flow until you learn the business that you're buying? Or would you buy a business that you're just buying the business and there's no money associated with it and you'd have to draw from your own reserves to get the business up and running as you want it to? So it also makes your business more valuable.
Of course, the first one, Sue. No doubt, no doubt. And now, with this word credit, there's the association of the word debt as well. And some people, they might have this fear. Um, how would you respond to that fear? I mean, with credit comes debt. Sometimes, I personally, if I talk about my personal finances, I also believe that with more and more relying on credit card, it will also get me into this rabbit hole of debt. So, what would you say in the business perspective of this fear?
Sure, I am debt averse as well, especially my personal. I don't want to be in debt to anybody, but using somebody else's money is always usually a good idea, depending on the interest rate or whatnot. So if you can find, like, business loans have better interest rates than personal loans. So if you can get a loan to help grow your business and the APR is prime or just a little above prime, and you can utilize that money to 10K what you're doing currently, get you to the next level, get you in the next contract, be a bridge loan so that you can get the next contract. For instance, if you are in construction and you've got a big project and in 4 months the project will be over and you'll make X amount of money. The problem is that you're not making any money to get to that large paycheck and you need a bridge loan. Some people can't even take the big contract because they're like, well, I can't pay my people. This would allow you to get a bridge loan so you can get bigger and better projects. So credit doesn't mean debt. Credit is the ability to get debt and maybe get better monies to bring you to the next level. And of course, you have to be diligent and knowledgeable about what you're doing. You don't want to overextend yourself. However, there's definitely uses. Not all debt is bad debt.
Yeah, yeah. I think this really makes credit less intimidating. I mean, it feels it makes it like a tool, not a trap. But of course, with the right information, as we call the financial literacy. Um, Now, a bit about your journey, Sue. Of course, our listeners will be so curious to know. I mean, it's fascinating because you built and sold a successful swim school and then
Right.
into finance. That is amazing. What a transition. So how did that personal experience shape the way now when you coach entrepreneurs around credit and profit growth?
Did you know that in India, most engineers are men? Research shows that only 14% of engineers in India are women. But it's growing. We are welcoming more women into engineering roles, creating flexibility, opening hybrid opportunities, and rewarding innovative work. Whatever your skills, ambition, or experience, there's a place for you here. We are making BP work for women. Find out more at bp.com/women of BP.
So yeah, went to school in Boston and got my kinesiology degree and was a PE teacher for a hot minute, and then started a swim school. And because I've been in sport and I've dealt with, I don't know, just being in charge all the time, just that type of, into my disc analysis, all that stuff. So, yeah, I was in the swim school industry, built the company from 600 kids a week to almost 2,000 kids a week, all in swim lessons, had other line items, um, made every mistake there was, didn't know about a lot of things. And as a small business owner, your head's down and you're working hard all the time. And one differentiator for myself than others is I come from the small business world. I'm not some corporate person who had a team of people and all the money in the world to do whatever I wanted. Yeah, it was a grind. And we sold in 2022 and we did really well. And then I'm like, well, as the small business owner who did the thing, for us it was swim lessons and did the marketing and did the strategies and bounced back from COVID and hired, fired, trained HR, payroll, all the things, compliance, workman's comp. I mean, all the things that it is to be a business owner that people don't think about. Wore all the hats. And then we sold and I was like, wow, that was great. That was a great run. Glad we did that. Now what? And I really liked money and dealing, well, not just my own money, but helping others with their money. I can't tell you, my adult children are set because I taught them what they needed to know. And at 18 years old, they started IRAs. I'm like, oh, if I had only known. So that kind of became the mantra. If I had known, what would I have done differently? And how can I help others be in a better situation than I was? So that's where, like, when I learned about corporate credit, it kind of smacked me in the face like, hey, why didn't I know about this? Why doesn't other people know about this? Why can't we all leverage this? I mean, Wall Street's been doing it for years. Their CEO is not personally guaranteeing their next factory or whatever. Why are we doing that? So that's kind of where the journey has gone. I just like to help small businesses in their journey get wherever they want to be, define success for them, and give them the tools. And corporate credit, yes, like you said, Sana, is just a tool.
Yeah. Wow. Wow. So then I can see that passion, that love, that conviction, and that resilience as well. Because yes, entrepreneurship, and especially when you're doing everything, you're building it from the scratch on your own, and then gradually and gradually, slowly and slowly, you're also building your team, the people. I mean, it is such it's kind of a very, very adventurous journey. And the most inspiring part here for me, exploring your journey is the self-taught thing. Often we kind of tend to give up in adversities. We think that I have to always look for resources, or I don't know this, so I cannot do this. I cannot even think something that I don't know, and we kind of become risk averse. So I think that self-taught, that spark of learning yourself, it is such an important skill that we all should have. That's what I believe, so personally.
Yeah, for sure. I mean, I blame sports, heavily into sports and competitive teams, and still am. And I think that taught me from very long or young age to, you fail, you fall, you lose, you get back up and you try again because you can't just wallow in your own sadness. So get back up and try. So I was told by one of my coworkers, actually. He said, either you can get your psychology or sociology degree, or you can be heavily involved in sports. So that's kind of where I think I got my determination and education from. And of course, my parents. And being the youngest of three and only girl, I had to keep up with my brothers, and I certainly did. We'll put it that way.
Super, super. I'm so inspired. I'm very sure our listeners, especially um the the when we talk about women in entrepreneurship, I think this is such an inspiring journey to take some key lessons from. That yes, sometimes as women we have to do things differently just to get to that level of acceptance. So that itself is I think a very, very huge feat. And before we wrap up, Sue, I think let's also talk about a bit about funding, because you are also expert in that. So you mentioned that with the right systems in place, businesses can actually secure funding in as little as 90 days. I mean, um, what does that process look like in practice, Sue?
So, I mean, There is a ton of different funding options out there, and you can talk to a broker, you can talk to a bank, you can talk to just a connector like I am. And just as a side with the women's empowerment and whatnot, I do speak on that as well. So if somebody's interested in me speaking to a group, that's fun too. Anyway, back to lending. There's all kinds of options out there. SBA loans are for business startups. You have to have a business plan and everything else, but keep in mind those are personally guaranteed and those are also government backed, which is well and good. However, if something goes wrong, guess who backed it? It was the government when talking about the US. So let's just be a little careful about our SBA loans. There's other loans out there. There's also all kinds of scammers out there. So make sure you do your due diligence, and doesn't always have to be with a bank. There's all kinds of angel investors and private equity and hedge funds and um, incubator startup groups for the medical world. But you just want to find somebody who's well versed in all of them and can steer you in the right direction.
Of course, that is that once again, no doubt, no doubt. Um, and so if our listeners, they would like to connect with you, for all the insightful resources that you're sharing, what would be the easiest way?
So the easiest way is either on Facebook with Sue Schuster at Profit Touring, and that's TURING, or my email, which is sschuster at profittouring.ai.
Super. I'll make sure to have all the details and links in the show notes for our listeners' easy reference. And so this was such a powerful conversation, because you made something, something which often feels complicated, credit, risk, funding, feel not only approachable, but then also empowering as well. So thank you so much for bringing this into the limelight.
You're welcome. I hope to hear from people.
Yeah, definitely. And to all the listeners out there, especially to all the entrepreneurs and business owners, or someone who is about to get into the journey of entrepreneurship, if you have been running your business with your personal credit card in one hand and crossed fingers in the other, maybe today is the wake up call you needed. Building corporate credit isn't about chasing loans, it is about creating freedom, security, and the ability to grow without putting your personal future on the line. So that's it for today's episode on BizBlend. Until next time, please remember your business deserves the same resources and protections as any big corporation out there. It starts with giving yourself permission to play the game differently, just like Sue did. So to connect with Sue, just refer to the show notes along with this episode. Until then, I'm Sarah and I'll catch you in the next one. Thank you.